Hi, everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap Letter. And already it is January 6th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market, rather than a recession, the U.S. labor market finished the year with one of the highest yearly job totals right here, yearly job totals in the past 10 years. So if there's no recession, then what is the market worried about? Well, slightly rising interest rates this week were certainly not helpful to the market. Now, our weekly stock analysis video, we're visiting the Amazon of Latin America, and this stock is up 100% in the past year, and if analysts' projections hold true, we're in for another great year in 2024 with this company. And our ETF video, well, the tech, semiconductors, and QQs, which are the NASDAQ 100 stocks, are all in downtrends along with most of the rest of the market. However, we don't see any type of panic selling, and this suggests we're seeing more portfolio readjustment rather than people just totally getting out of stocks. All right, now let's look at the S&P 500, and here we are, and of course we had that big run up till we broke this line in the top band, which means strong market. Then we leveled out for about a week and a half, almost 2 weeks, and now we came down to this 20-day moving average, fell below it, and yesterday closed, and I'm talking about Friday, closed up for the day, but not above the 20-day moving average. Now, this means the market is testing that 20-day moving average, but from the bottom. We don't like to see the test from the bottom without it breaking through to the upside. And this indicator down here, intermediate term indicator, is still pointing down. But let's go to this chart. Now, this was last week. So we had the S&P run up and just start going down. But the drop on the past Friday caused this sell signal on the short-term relative strength indicator. So last week we had a sell signal. Now let's look at this week. This week, we had that sell signal, market came down, and it looks like it might be forming a buy signal here. However, market came down, and then Friday, just at the end of the day, closed up. So Monday we have to see a down day, and then Tuesday an up day to give us a formation like this, or even like this. So we're waiting on that. But again, as I said, the market is attacking the 20-day moving average from the bottom, and it can't close above it. So that's what we're worried about. What other thing worries about us is that we have this gap down here, and we don't like to see that. That's like several hundred points away. But first, we have to get down to this 50-day moving average, which is the blue line right here. This red line is the 200-day moving average. We don't see that kind of movement to the downside. But these red lines, these red vertical lines, they're holding up, and that's the volume on the down days. This is the S&P 500. We saw the volume drop off in the ETF letter that we put out today for those ETF subscribers. We could see the downside volume drop off on the semiconductor and the tech ETFs and the QQQs also. So we saw that volume drop off, but however, on the S&P 500, we don't see that volume drop off. And by volume, I'm talking about these red vertical lines. We saw the volume drop off on and when we say the volume drops off, that means the selling volume is declining or decelerating, but we don't see it on the S&P 500. So we have an important week coming up this week relative to the market. Is it going to hold this 20-day moving average up here or not? But we do have this sell signal on the intermediate term indicator, and we are still overbought in the market. And so we are relieving that 2-month rally that we had in November and December, which caused this market to go up like this, and we'll just have to see what happens this coming week. But we're looking at a possible little buy signal because of up here. However, the downside volume did not drop off, and we do have a sell signal on the intermediate term indicator. So we're getting the mixed signals here, and maybe I'm just being optimistic about this signal forming here, but that's what it's doing. So we'll have to wait a couple of days to see if it does form and give us a buy signal like it did back here. But back here, let's go down here, and we can see that this intermediate term indicator was way oversold, and it was also giving us a buy signal. Where over here, if we get this little buy signal on the very, very short-term indicator, we still have the sell signal on the longer-term indicator. So maybe we'll get a little bounce back up, and then the market would fall further over the next couple of weeks. So we'll just have to wait and see, folks. This week is a pretty important week to you technical people. To you other folks who are hedged, you don't have to worry because you're hedged. Now, the intermediate term hedging is still on for our portfolios or ETFs, and those of you that are always hedged could care less. You're down with the market down, or the semiconductors and the tech's down about 4.7%. If you're hedged, you're down about 1.2% or 1.7%. So you're not even worried about that if you're always hedged. So we'll see what happens, folks. We're in for a nice week coming up, and it's still January, so the market is feeling itself out for this new year. But don't forget, the Fed is going to lower interest rates. However, the jobs report on Friday said, well, not so fast. We are not losing jobs. We are creating jobs. And that's why we had a little rise in interest rates this week, which caused the market to go in the opposite direction, which is down. So we'll just have to see what happens to interest rates this coming week. That's very important. And for portfolio protection, those of you who always have put protection, you're sitting fine. You don't even care what the market does on a day-to-day situation. And so you have these puts in place about between 10 to 12 to 15% below the market, just in case something weird happens. And these are always in place. So, folks, we had a little break in the market this week, and as you can see, we have a few storm clouds out there with the sun shining through, and that's what we're looking at this week, to see if the sun can shine through a little bit more than having these heavy clouds in here. And by the way, some of you asked who takes these pictures, and we have new pictures almost all the time. Well, that's Debbie with a Y. She's out there at dawn. Yeah, this is the sunrise, folks. She's out there at dawn taking these beautiful pictures before she comes back into the office. So thank you, Debbie with the Y. And folks, we had just a little trouble this week in the market, but we had 2 months before that were fantastic. And the economy is looking strong. So what's there to be worried about? All right, folks, you go out, you have a good time, be with your family, be with your loved ones. Take it easy over the weekend. Stay safe, and we'll see you back here next week.